I'm concerned that what my Republican colleagues are aiming for is another industry handout that gives the crypto lobby exactly its wish list. These are the sharp, cautionary words of Democratic Senator Elizabeth Warren, and they cut right to the heart of a monumental battle unfolding in Washington right now. This isn't just a political squabble, it's a high-stakes war for the soul of modern finance, and the shockwaves are already being felt across the globe. Bitcoin, the digital titan, has just smashed through another record high, propelled by a tidal wave of investor optimism. But this surge isn't just random market noise. It's directly tied to a dramatic thawing of the frosty relationship between the crypto world and the corridors of power in the United States. Next week has been dubbed Crypto Week, a legislative showdown that could fundamentally rewrite the rules for digital assets forever. So, what is actually going on? Is this the moment crypto finally gets the legitimacy it has craved? Or is it a dangerous concession to a volatile and poorly understood industry that preys on the uninformed? In this deep dive, we are going to decode the entire situation. We'll unpack the critical bills on the table in the House of Representatives that have the market buzzing with anticipation. We will investigate the central role of Donald Trump, who has boldly declared himself the crypto president, and examine the controversial financial ties his own family has to the industry. And finally, we'll weigh the euphoric predictions of a new financial era against the dire warnings from seasoned analysts who fear this hype is outpacing reality. This is the story of policy, power, and unprecedented profit. The air in the financial world is thick with anticipation, and it all revolves around a series of votes scheduled to begin on Monday in the U.S. House of Representatives. For years, the digital asset industry has operated in a gray zone, a kind of regulatory Wild West, pleading with lawmakers for a clear set of rules. Now, it seems, their calls are finally being answered. On the docket are several pieces of legislation, most notably the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act. The collective passing of these bills would represent the most significant legislative victory for the crypto industry in its history. The mere prospect of this has sent a jolt of pure adrenaline through the markets. Investors are no longer just betting on the technology, they are betting on policy. As Jag Kuhner, the head of derivatives at the crypto exchange Bitfinex, astutely pointed out, the significance of this moment transcends the fine print of the laws themselves. He stated, "Even if final passage stalls, the optics of legislative engagement are bullish." In other words, the very fact that Washington is taking crypto this seriously is a massive green light for investors who have been sitting on the sidelines waiting for a signal that it's safe to jump in. And that signal is now flashing brighter than ever before. At the center of this political whirlwind stands a figure who is no stranger to shaking up the status quo, former President Donald Trump. He has leaned heavily into the crypto narrative, positioning himself as the industry's champion in a way no other major political leader has. His declaration of being the crypto president is not just a catchy slogan, it's a strategic alignment with a vocal and increasingly influential voter base, many of whom feel alienated by the traditional banking system. Trump has publicly urged policymakers to craft a new, favorable regulatory framework, and his influence within the Republican Party makes his support a game changer. But his involvement goes beyond mere political posturing. The Trump family has direct business interests in the crypto space. His sons, Eric and Don Jr., are at the helm of a platform called World Liberty Financial, a venture that places the former president's family squarely within the industry he is vowing to support. This has, unsurprisingly, drawn sharp criticism and raised alarms among ethics experts about potential conflicts of interest. How can a president impartially regulate an industry from which his own family stands to profit? The White House has pushed back, stating that the former president's assets are managed in a trust by his children and that no conflicts of interest exist. But critics argue that such a trust is hardly blind, and the potential for policy decisions to directly enrich his family's ventures remains a significant ethical cloud. Regardless of the debate, the practical reality is that Trump's blessing is seen as the final piece of the puzzle. With his promise to sign these bills into law, A path that once seemed blocked by political gridlock and regulatory hostility now looks like a clear runway for the crypto industry's ambitions. This intersection of immense political power and a multi-trillion-dollar financial market is truly unprecedented. The decisions made next week could shape the flow of capital for decades to come. If you're finding this analysis of the high-stakes game being played in Washington compelling, please take a moment to hit that like button. Your support is crucial and allows us to continue bringing you these in-depth reports. So what exactly is in these bills that has the market so electrified? Let's break down the two most significant ones. First, there's the Genius Act. This bill tackles one of the most important yet often overlooked corners of the crypto universe, stablecoins. Stablecoins are cryptocurrencies specifically designed to maintain a constant value, typically pegged one-to-one with a stable asset like the US dollar. They are the essential plumbing of the crypto market, allowing traders to move funds quickly and efficiently between different tokens without cashing out into traditional currency. The Genius Act aims to bring them out of the shadows and into the mainstream. It received bipartisan support in the Senate and is widely expected to pass the House. The bill would mandate that stablecoin issuers back their tokens with highly liquid assets, such as actual US dollars and short-term treasury bills. Furthermore, it would force these issuers to publicly disclose the composition of their reserves on a monthly basis, providing a level of transparency that has been sorely lacking. This is a direct response to the catastrophic collapses of underbacked stablecoins in the past, which wiped out billions in investor capital. For proponents, this is a landmark step. They argue that these rules would legitimize stablecoins, making them trustworthy enough for major banks, global retailers, and everyday consumers to use for instant payments and fund transfers, potentially revolutionizing digital commerce. The second, and arguably even more profound piece of legislation is the Clarity Act. This bill gets to the very heart of the long-running, existential debate that has plagued crypto in the United States. Is a cryptocurrency a security or a commodity? This isn't just a semantic argument. It's a question with multi-trillion-dollar implications. If a token is deemed a security, it falls under the stringent jurisdiction of the Securities and Exchange Commission, or SEC, which comes with a mountain of regulations. This means projects must undergo a costly and complex registration process, akin to a traditional company's initial public offering, making it nearly impossible for most to list and trade legally in the US. If, however, it's classified as a commodity, it's overseen by the much more lenient Commodity Futures Trading Commission, or CFTC. For years, crypto companies have battled the SEC's tough enforcement actions, arguing that most tokens are commodities. The Clarity Act aims to settle this dispute once and for all. If it passes the House and eventually the Senate before being signed by Trump, it would establish a clear regulatory regime, defining the roles of both the SEC and the CFTC. The expectation is that it will expand the CFTC's oversight and classify the vast majority of tokens as commodities, just as the industry has been demanding. This would be a monumental victory, effectively opening the floodgates for crypto platforms to offer a much wider array of tokens to their customers with far fewer regulatory hurdles. The mere hope of this legislative dream becoming reality has lit a fire under the entire crypto market. The numbers are nothing short of breathtaking. The world's largest cryptocurrency, Bitcoin, was last reported as surging by 3.3%, reaching a staggering price of $117,333.32. This has pushed its gains for the year to an incredible 26%. Even more impressively, the digital asset has skyrocketed by nearly 41% in just the last 3 months. This explosive growth has triggered a broad rally, with capital pouring into the sector. As Nikolai Sondergaard, a research analyst at Nansen, noted, there have been strong and sustained inflows into the related spot exchange-traded funds, which are now acting as a major driver for prices. The rising tide is lifting all boats. Publicly traded companies with exposure to the crypto ecosystem are riding the wave. The prominent Bitcoin buyer and holder, Strategy, saw its stock rise 1.9%, validating its corporate strategy of using Bitcoin as a treasury reserve asset. Even more volatile crypto miners like Riot Platforms, Hut8, and Mara Holdings, which are essentially leveraged plays on the price of crypto, gained between 0.7% and 1.6%. Ether, the second largest token, jumped by 5.13%. Other major tokens like XRP and Solana also saw gains of 9.7% and 0.8%, respectively. The cumulative effect is a market that is swelling to an almost incomprehensible size. According to data from CoinMarketCap, the total market value of the entire crypto sector now stands at approximately $3.67 trillion. To put that in perspective, that's larger than the entire economy of the United Kingdom. This isn't a niche market anymore. It's a global financial force. And as investment analyst Dan Coatsworth from AJ Bell aptly put it, the reason for this mad dash is clear. Investors are racing to take positions ahead of the extra publicity this event could attract. The fear of missing out on a politically endorsed bull run is palpable. But amidst the champagne-popping euphoria, a chorus of cautionary voices is growing louder, warning that this runaway train might be headed for a cliff. The most prominent political critic is Senator Elizabeth Warren. She sees this legislative push not as progress, but as a dangerous capitulation. She argues that the Trump administration and its allies are conceding too much to the crypto industry at the expense of protecting consumers and retail investors. Her concern is that in the rush to legitimize crypto, essential safeguards against fraud, scams, and market manipulation are being dismantled, leaving ordinary people vulnerable to the industry's notorious volatility and risks. She fears this is not about innovation, but about an industry handout. This sentiment is echoed in the more measured but equally concerned corners of the traditional financial world. Analysts are warning that the hype may be far outpacing the reality of what crypto can deliver. Dirk Willer, who serves as Citi's global head of macro, asset allocation, and emerging market strategy, threw cold water on one of the industry's favorite narratives. Attention has turned to Bitcoin's role in portfolios, with some likening the crypto asset to digital gold. This moniker is likely premature, he stated. His point is that gold has a millennia-long history as a store of value and tends to have lower volatility, characteristics Bitcoin has yet to prove over time. This is a direct challenge to the idea that Bitcoin is a safe haven asset. Other analysts are pointing to the extreme volatility that is likely just around the corner. Simon Peters, a crypto analyst at the online brokerage eToro, balanced optimism with a stark warning. It's hard not to be optimistic about Bitcoin at this moment in time, but the risk of a fall in price or short-term pullback still exists. For new investors, a pullback in crypto isn't a gentle dip. It can be a terrifying plunge of 20, 30, or even 50% in a matter of days. He advises investors to pause and carefully consider their risk tolerance before jumping into the frenzy. The core fear is that as crypto becomes more deeply embedded in the traditional financial system, its potential to cause systemic damage grows exponentially. And so, we find ourselves at a historic crossroads. On one path, a future where cryptocurrency, endorsed by the highest levels of government, seamlessly integrates into the global economy, unlocking new forms of commerce and creating a new generation of wealth. This path is paved with record-high valuations and the powerful backing of a former president who has staked his reputation on becoming the industry's greatest ally. On the other path lies a much darker possibility, a politically engineered bubble inflated by an intoxicating mix of hype, deregulation, and a collective disregard for immense risk. A bubble that critics fear is being created to benefit a select few at the expense of many, and one that is destined to pop with devastating consequences for the very consumers and retail investors the regulations were supposed to protect. What do you believe is the more likely outcome? Is this the dawn of a new financial age? Or are we witnessing a catastrophe in the making? We want to hear your perspective, so drop your thoughts in the comments section below. And if you want to stay on top of this story and see how this historic crypto week ultimately unfolds, make sure you are subscribed to the channel and have that notification bell turned on. The votes are about to be cast. The market is holding its collective breath. And the very future of money as we know it is hanging precariously in the balance. This is a moment where fortunes will be made or lost, not just on market trends, but on the very words written into law. The outcome is anything but certain.